Hi, I'm Robert MALTBIE. This is MALTBIE's Minute on the Market, pre-summer edition. We've just had some amazing things happen in the market. Let me start off with a quote that I came up with. Quote myself: "At the altar of the new age of AI, where enlightenment, discovery, and creativity meld together to help us reach the highest apex in human potential. We are the masters and AI is the tool," not the reverse. Let's get into the market we're in. The question is, what happens after NVDA? NVDA has been the monolithic leader of the market over the last several weeks, accelerating into June, announcing a split, and with its earnings report accelerating it as well. In fact, if we take NVIDIA out, the S&P is flat. It's amazing. NVIDIA is up 142%, and after this year's run, it's on the cusp of becoming the largest stock, replacing Microsoft. Let's take a look at the overall market in our argument and belief that the market will broaden out after NVIDIA, and soon, possibly by late summer. We see three things right now propelling the market for the bulls, and they are the technical indicators, all major indices comfortably above their technical 200-day moving average lines, followed by liquidity. There's ample capital on the sidelines, over $6 trillion, and over $18 billion came into ETFs and money mutual funds, equity funds. And earnings momentum, perhaps most importantly, showing that it's not just NVIDIA, that the rest of the market or other stocks are starting to broaden out. Let's take a look at that factor. Earnings revisions and forward growth estimates continue to trend higher. This is indicative of the early stages of a bull market. The earnings growth has been the highest this quarter since 2021. Revisions trending higher, up 7.2. Additionally, earnings expectations for the year up to 9.2. For the out year, 2025, up to 14%. So clearly you have a market that is forward-looking, anticipating broadening and better growth that is spurred by AI. Let's take a look at the valuations in the market. Small caps, which we feel will benefit next with an interest rate cut. There's a lot of debate about that, but we think it's coming for two reasons, sooner than most think. One is, well, the incumbent and his position in the presidential race, he is behind right now in a lot of the key polls. Also, the leading economic indicators, a much more broader outlook than just CPI or the employment report, is showing a decisive slowdown in the overall market. We think these two factors will propel the Fed to cut maybe by September. This will be very positive for small caps since they have more debt proportionally on their balance sheet. Now, small caps also trade at a massive PEG ratio discount to the S&P 500. That is an epic proportion not seen since 08-09, nearly 60%. So it's very hard, we think, not to take advantage of that. A good way to do that is to come to our Singular Research Summer Solstice Conference in New York on Thursday, June 20th. We'll be spotlighting 20 of these small cap ideas. At our last web call, we had lightning strike. A company that received a buyout offer and traded up 28% that day. Additionally, one of the focus companies in the internet space, in the crypto space, has nearly doubled over the course of the last month. We've got new ideas that are really strong values and under-owned by the institutions. So come join us at our summer solstice. Go to our website, singularresearch.com, and register, where you can see and meet management of these very well-positioned companies to lead performance and create higher returns after NVDA in the second half of this year. I'm Robert MALTBIE. This is MALTBIE's Minute on the Market. Thank you.